What if I told you that financial freedom isn't just for the lucky few? It's a game anyone can win with the right strategy. You don't need to gamble on meme stocks or chase the latest market trends. The real key to long-term wealth is investing in companies with massive growth potential, the kind of businesses that could dominate their industries for years to come. In this video, we're diving deep into 6 high-growth stocks that have the potential to skyrocket over time. These aren't just random picks. Each one has been carefully selected based on innovation, industry leadership, and financial strength. The goal? To build wealth the smart way, through research-backed investments, not risky bets. Think about this. Every massive company today, Apple, Amazon, Tesla, was once just another stock on the market. Those who spotted their potential early made life-changing returns. Could one of the stocks we discussed today be the next big winner? Stick around, and you might just find an opportunity that changes the way you invest forever. Before we jump in, do me a quick favor, hit that like button and subscribe to the channel. It helps the channel grow and allows me to keep bringing you high-quality investment insights. Now let's get into it. Imagine a world where businesses run faster, smarter, and more efficiently, all thanks to one powerful software working behind the scenes. Well, that's exactly what Dynatrace, DT, is doing. In today's digital age, companies live and breathe on the cloud. Whether it's Amazon, Netflix, or your favorite shopping app, everything depends on cloud infrastructure. But here's the problem. When things go wrong, businesses lose money. Fast. That's where Dynatrace steps in. Dynatrace is a leader in software intelligence, helping businesses monitor, optimize, and automate their cloud operations. Think of it like the brain behind the cloud, ensuring everything runs smoothly and efficiently. Let's break it down. Market cap $18.37 billion. This isn't a small player. Dynatrace is a serious contender in the software intelligence space. Revenue, 2024, $1.63 billion. A strong, growing business with a steady cash flow. Net income, $14.63 million. While profits are still growing, reinvesting in innovation is the key to long-term success. EPS 0.58 PE ratio, 108. Now I know what you're thinking, a PE ratio over 100, that's expensive. But here's why Dynatrace could still be a winner. 1. The cloud boom is just getting started. More businesses are shifting to cloud infrastructure than ever before. And as they do, they'll need tools to manage performance, security, and efficiency. Dynatrace is already a go-to solution for companies worldwide. 2. New innovations keep them ahead. Just recently, Dynatrace launched a security solution to protect businesses from cyber threats, and they introduced new AI-driven monitoring tools for developers. In an industry that moves fast, innovation is everything, and Dynatrace is leading the charge. 3. Trusted by industry leaders. They're not just some niche tech company. Dynatrace was recently recognized as a customer's choice in Gartner's Peer Insights report for observability platforms. That's a big deal because it means businesses trust their software. Of course, no investment is without risks. Dynatrace operates in a highly competitive space with big names like Microsoft and Amazon offering similar solutions. But here's the thing. Dynatrace specializes in automation and AI-driven monitoring, giving them an edge. With the demand for cloud solutions skyrocketing, this stock could see significant long-term growth. With cloud computing becoming the backbone of modern business, Dynatrace is in a prime position to capitalize on this massive shift. But technology isn't the only space seeing explosive growth. Another industry is undergoing a major transformation driven by the global push for sustainability. Let's dive into a company at the forefront of this revolution. The future of energy isn't fossil fuels, it's clean, renewable power. And one company is leading the charge for solar, FSLR. We're in the middle of a massive energy transition. Countries and corporations worldwide are pouring billions into renewable energy. Governments are setting aggressive clean energy targets, and solar power is one of the fastest-growing solutions. That's where First Solar comes in. Unlike most solar companies that rely on traditional silicon-based panels, First Solar has a unique edge. Their thin-film solar technology is not only more efficient in high temperatures, but also cheaper to manufacture. That's a big advantage as demand for cost-effective, scalable solar solutions skyrockets. And here's where it gets even more exciting. Expanding production. First Solar is opening new manufacturing plants in Alabama, Ohio, Louisiana, and even India. This expansion means they're preparing for a huge surge in demand. Record-breaking growth. In 2023, First Solar shipped more solar modules than ever before, reinforcing its dominance in the industry. government support, with tax credits, subsidies, and increasing regulations against fossil fuels, First Solar is in prime position to benefit from global clean energy policies. Let's break it down. Market cap $17.09 billion. This isn't just another solar company. First Solar is a major player in the renewable energy revolution. Revenue $3.85 billion. Not only are they growing, but they're also turning a solid profit, something not all renewable energy companies can say. Net income $830.78 million. That's nearly $1 billion in profit, proving that going green can also mean making green. EPS 4.44 PE ratio, 36.1. Unlike some high-growth stocks with sky-high valuations, First Solar is trading at a reasonable PE ratio, making it an attractive option for long-term investors. First Solar isn't just a green energy stock, it's a strategic play on the future of global energy. With its low-cost, high-efficiency technology and aggressive expansion plans, this company is set to ride the wave of the renewable revolution. Of course, no investment is without risks. Competition in the solar industry is intense, and raw material costs can fluctuate. But with First Solar's strong government partnerships, expanding global footprint, and innovative technology, it's positioned for long-term success. Now, let's move from solar power to another industry that's quietly revolutionizing healthcare, one breakthrough at a time. When it comes to medical breakthroughs, we often think about new drugs or cutting-edge surgeries. But what if I told you that some of the biggest advancements in healthcare aren't happening in labs or operating rooms, but in the technology behind medical devices? That's where Boston Scientific, BSX, is changing the game. This company isn't just making medical tools, it's reshaping how diseases are treated, how surgeries are performed, and how lives are saved. And with a market cap of over $50 billion, they're not slowing down anytime soon. Innovation at its core, Boston Scientific focuses on minimally invasive medical technology, meaning faster recoveries, fewer complications, and better patient outcomes. As global healthcare improves, demand for their devices will only grow. Strong financial performance. In 2023, the company generated $44.24 billion in revenue, with a net income of $1.59 billion. Investors are paying attention too. The stock has climbed 57% in 2024 alone. Aging populations equal sign more demand. With populations living longer, the need for heart procedures, neurological treatments, and chronic disease management is increasing. Boston Scientific is at the center of this demand. Big acquisitions equal sign bigger market share. The company recently acquired Axonics, a leader in bladder and bowel dysfunction treatments. This expands Boston Scientific's reach into a high-demand sector of healthcare. Game-changing cardiac innovation. Their FARAPulse trademark pulsed field ablation system is revolutionizing the treatment of atrial fibrillation, AFib, a heart condition that affects millions. This tech provides a safer, more effective alternative to traditional heart procedures. Growth beyond the U.S. Boston Scientific is expanding globally, increasing sales in Europe, Asia, and emerging markets, where demand for advanced medical treatments is rising. Alright, let's talk numbers. Because at the end of the day, a great company is only a great investment if the numbers make sense. Market cap $156.82 billion. This isn't a small player. Boston Scientific is a dominant force in the medical device industry with a strong global presence. Revenue, $15.91 billion. And it's not just big, it's growing consistently. More revenue means more opportunities for expansion and innovation. Net income, $1.59 billion. Profitability is key, and Boston Scientific is proving that healthcare innovation can also be highly profitable. EPS 0.82 PE ratio, 129. Now I know what you're thinking, that PE ratio looks high. But here's the deal, investors aren't just buying what the company is today, they're betting on what it will be in the future. And with Boston Scientific's track record of innovation and expansion, the premium valuation could be justified. A small risk to keep in mind. Like any healthcare company, Boston Scientific faces regulatory challenges and occasional recalls. In late 2024, they had to recall some catheters due to a safety issue. But here's the thing, they acted fast, addressed the problem, and kept moving forward. Boston Scientific is not just a stock, it's a bet on the future of healthcare. As populations grow older and demand for minimally invasive high-tech treatments increases, companies like this will continue to thrive. Now let's move from healthcare innovation to a company playing a key role in the future of pharmaceuticals. Think about the last big medical breakthrough you heard about, maybe a life-saving cancer drug, a revolutionary weight loss treatment, or a new Alzheimer's therapy. Every single one of those went through clinical trials before reaching patients. And guess who plays a huge role in making that happen? MedPace Holdings, MEDP. This company isn't just another name in healthcare. It's the engine behind pharmaceutical and biotech innovation, working behind the scenes to help develop, test, and bring new drugs to market faster. With the demand for new treatments skyrocketing, MedPace is in the perfect position to capitalize on this multi-billion-dollar industry. Why MedPace is a game-changer, clinical research powerhouse. MedPace provides end-to-end services for drug trials, making the process smoother, faster, and more efficient for biotech and pharmaceutical companies. Massive market opportunity. The pharmaceutical industry is booming, with billions being invested in new therapies. As new drugs get developed, the demand for clinical trials is higher than ever. Explosive financial growth. MedPace isn't just growing, it's thriving. In 2024 alone, their revenue hit $2.1 billion, up 11.8% from the previous year. High profit margins. With a net income of $404.4 million and a strong profit margin of 19.2%, this company knows how to turn research into revenue. The numbers that matter, let's break it down. Market cap, $10.36 billion. MedPace isn't just another player in the healthcare industry, it's a key driver of pharmaceutical innovation and a powerhouse in clinical research. Revenue, 2024, $2.07 billion. That's an 11.8% increase from the previous year, proving that demand for drug development is skyrocketing. Net income, $404.4 million. Not only is MedPace growing, but it's also highly profitable, with strong margins of 19.2%. EPS $8.85. PE ratio 38.7. A solid valuation for a company operating in one of the fastest growing sectors of healthcare. MedPace is riding one of the biggest trends in healthcare, the need for faster, more efficient drug development. As diseases become more complex and personalized medicine advances, companies like MedPace will only become more valuable. The one thing to watch? The company is currently under investigation for potential securities law violations. While this might cause short-term turbulence, its long-term potential remains strong. MedPace isn't just another stock, it's a direct bet on the future of medicine. As new treatments continue to reshape healthcare, the demand for clinical research will only grow. And with its strong track record, MedPace is positioned to stay at the forefront of this multi-billion-dollar industry. Now let's move from pharmaceuticals to a company playing a key role in the future of energy. Let's be real, oil and gas aren't going away anytime soon. While renewables are the future, the world still runs on traditional energy. And when it comes to leading the oilfield services industry, Schlumberger, SLB, is the dominant force. But here's what makes SLB really interesting. They're not just sitting on their massive oil and gas empire, they're adapting. They're investing in next-generation energy solutions like geothermal energy and carbon capture to stay ahead of the curve. So, if you're looking for a strong, cash-flowing company that's not only thriving in the present but also investing in the future, this is one stock you'll want to watch. Why Schlumberger is a powerhouse, undisputed oil and gas leader. With a $60 billion market cap, SLB is the largest oilfield services company in the world, providing the tech and expertise that energy giants rely on. Big money, big growth. In 2024, Schlumberger generated $36.2 billion in revenue, with a net income of $4.46 billion. That's serious profitability. Dividend potential. Unlike some high-growth stocks, SLB offers a solid 2.59% dividend yield, making it attractive for both growth and income investors. The numbers that matter. Let's break it down. Market cap, $58.76 billion. A true giant in the energy sector with decades of dominance. Revenue, 2024, $36.28 billion. Not just surviving but thriving, proving that oilfield services are still in high demand. EPS $2.92. PE ratio 14.4. A solid valuation balancing growth, stability, and income potential. Dividend yield, 2.59%. Not only does SLB offer growth, but it also pays you to hold the stock. What makes SLB even more exciting is how they're positioning themselves for the future of energy. They're not just focused on oil and gas, they're expanding into sustainable energy solutions like geothermal energy. In January 2025, SLB partnered with Star Energy Geothermal to develop more efficient geothermal technology. Why? Because geothermal is a reliable, renewable energy source that can scale. Carbon Capture SLB secured a contract in early 2025 to help reduce carbon emissions for Hafslund Celsio. They're building carbon capture solutions to help industries clean up their emissions. SLB is in a unique position. It dominates traditional energy today while investing in the clean energy technologies of tomorrow. That's the kind of company that can adapt, survive, and thrive no matter how the energy industry evolves. The risk? Like any energy company, SLB's stock can be volatile, influenced by oil prices and global energy demand. But with steady revenue, strong profits, and forward-thinking initiatives, this is a company that knows how to navigate change. If you're looking for an investment that delivers solid cash flow today while betting on the future of energy, Schlumberger should be on your radar. Energy powers the world, but what powers the technology shaping our future? From artificial intelligence to high-performance computing, the next company on our list isn't just riding the tech wave, it's creating it. Let's dive into one of the most dominant forces in the AI revolution. If there's one company that's shaping the future of artificial intelligence, gaming, and high-performance computing, it's NVIDIA. This isn't just a tech stock, it's the backbone of AI innovation, powering everything from ChatGPT-style AI models to self-driving cars, next-gen gaming, and even robotics. And with a jaw-dropping market cap of $2.95 trillion, NVIDIA is playing in a league of its own. But here's what makes NVIDIA truly unstoppable. They're not just following the AI boom, they're building the hardware that makes it possible. Why NVIDIA is a game-changer AI superpower? NVIDIA's GPUs are the gold standard for AI and machine learning used by companies like OpenAI, Google, and Tesla to power advanced AI models. Gaming dominance. From GeForce RTX graphics cards to ray tracing technology, NVIDIA delivers next-level gaming performance that millions of gamers rely on. Autonomous vehicles and robotics. NVIDIA's Drive platform is leading the charge in self-driving car technology, while their Jetson AI is shaping the future of robotics. The go-to for data centers. Big tech companies rely on NVIDIA's high-performance chips to process insane amounts of data in cloud computing and AI workloads. The numbers that matter. Let's put things into perspective. NVIDIA isn't just a tech company, it's an AI empire. The numbers speak for themselves. Market cap $3.362 trillion. Yes, trillion. With a T, NVIDIA is now one of the most valuable companies on the planet, competing with the likes of Apple and Microsoft. Revenue, 2024, $113.26 billion. That's not just growth, it's explosive growth, driven by an insatiable demand for AI chips across industries. Net income, $29.76 billion. This company isn't just making money, it's raking in cash at an unprecedented scale. EPS $1.91, PE ratio 70.9. Yes, the valuation is sky high, but here's the thing. Investors aren't just betting on NVIDIA today, they're betting on its role in shaping the future of AI. What's next for NVIDIA? Blackwell AI chips. NVIDIA just launched its next-gen Blackwell AI architecture, introducing the B100 and B200 AI chips, designed to supercharge generative AI models like ChatGPT. Humanoid robots? NVIDIA is now working on Jetson Thor, a high-performance AI system designed to power humanoid robots, potentially revolutionizing automation in factories, logistics, and even household robots. Every major tech giant needs NVIDIA, from Microsoft and Amazon to Tesla and Meta. Everyone is racing to secure NVIDIA chips for their AI projects. Supply can't keep up with demand, which only increases NVIDIA's dominance. NVIDIA isn't just another semiconductor company, it's the backbone of AI and the future of computing. Every major breakthrough in AI, gaming, robotics, and self-driving cars is powered by NVIDIA's technology. The risk? With a PE ratio over 70, some argue the stock is overvalued. But here's the thing. NVIDIA is playing in a market that's only getting bigger. AI demand is skyrocketing, and as long as that continues, NVIDIA's stock will have room to grow. If you believe in the AI revolution, gaming, autonomous cars, or robotics, then you believe in NVIDIA. This company is at the center of everything that's shaping the future of technology. Investing isn't about luck, it's about strategy. The most successful investors don't chase hype or short-term wins. They understand the bigger picture and make decisions based on research, patience, and long-term growth. Here are 3 golden rules every investor should keep in mind. Think long-term. The biggest gains come from holding strong companies over time. Chasing short-term trends? That's a recipe for losses. The best investors play the long game. Diversify your portfolio. Don't put all your money in one industry. Spreading investments across different sectors reduces risk and helps you navigate market fluctuations. Do your research numbers don't lie. Study financial reports, industry trends, and market shifts to make smart, informed decisions, not emotional ones. What we learned from these stocks: Schlumberger versus First Solar. Two energy giants, two very different paths. One dominates traditional oil and gas, the other is leading the renewable revolution. The lesson? Energy is evolving and there's opportunity in both. Nvidia's high valuation? It might be justified. Some investors shy away from stocks with sky-high PE ratios, but sometimes big valuations reflect even bigger potential. AI is reshaping the world, and Nvidia is at the heart of it. Investing isn't about timing the market, it's about time in the market. If you pick strong companies, think long-term, and stay informed, your portfolio will thank you. If you found this breakdown valuable, make sure to hit that like button and subscribe. It helps the channel grow, and I'll keep bringing you the best investment insights. See you in the next one.